away we go for a Monday, folks. Let's get to it. Happy to have everyone back. You know what? I'm about 95% better, although I'm still kind of trying to get the invaders, bacterial invaders, out of my body. Other than a massive storm dumping here in Miami right now, everything's cool. If for any chance my internet connection cuts out, I'll try to come back. I don't know. We just got hit. It just started up about 10 minutes ago. So, a lot to get to today. And hopefully we'll have some thundercloud rain effects in the background. Let's see how it goes. Today, folks, let's talk about harmonic pattern exhaustion and how to overcome it, because this is a marathon, not a sprint, and we do have a lot of big patterns we need to deal with. Don't want to be dismissive, but boy, certain things we need to look for. We've seen Bitcoin go sideways for the better part of a few weeks now, and we'll talk about what's going to happen here. It's been quite a kind of a dead, almost dormant reaction to a lot of these situations, but that's when we need to pay the most attention. So, quick shout out to everybody in the chat. How's it going? Great to have everybody back here on a Monday. We are here Monday, Tuesday, and Thursday. We're starting up at 12 noon, 11:55. Getting better on that. And we definitely are continuing increasing the content offering on members pages, the gold members, silver members. And quick note, folks, let's get to the business. I would normally say go sign up for the basic membership, but right now we got a bot attack, so we're dealing with that. If you can't register as a basic member, just come back tomorrow, or you can send me an email directly at harmonictrader@gmail.com, and we'll try to accommodate. But just having a little issue over the weekend, so we're going to get that fixed. But again, thank you to everybody that is here. Been getting a lot of great feedback, and again, I appreciate all of that. Let me just take everybody on a quick view of the basic members page. Listen, this is the #1 place to start, and I think before you even watch a video or anything, you need to go to TradingView, get yourself an account, and you can get a free account at TradingView and then get the free trial from us. The beauty of our new configuration is that you only need to have a trial account, and you can have, you can get set up. You don't need to lay down any cash to get set up and to see what we're doing. I think that's important, because I feel like you have to give people a fair shake. See what's going on. Hey, if harmonic patterns are for you and you get it and it clicks, the levels, what we're doing here, I think you're on your way to a really defined trading plan and strategy where you have a heck of a lot more definable environment than if you're just chasing markets. So appreciate that. Appreciate everybody here in the chat today. Thank you. Good morning, good afternoon, good evening, wherever you are. Let's talk about crypto really quick and get into the other markets. I think it's what we saw over the weekend was just a continuation of this dormant action. We are exhausted, if you will, in terms of on the downside. This is something I've been saying, where with all of these patterns and with the degree of the depths of this current correction, I don't want to be complacent and not think that there's some kind of oversold opportunity here. But I absolutely want to focus on the zones, the patterns when they materialize, and then locate within these ranges optimal entries for trades. So we've talked about this situation in Bitcoin, and One quick comment is that I did have a layout open last week where I was showing some charts that did not have the proper HSI arrows. So I want to let you know that I fixed that. I run these. I run the sessions off a different computer, and this was not properly updated. So if you ever see a discrepancy between what you're running on Harmonic Pattern Collection and what I'm showing, certainly reach out to us. And, that helped me. A couple of you sent me a note with the chart. It's always helpful to include the chart so I know specifically what you're talking about. But we've got that resolved. But I think where we are currently with crypto in general is absolutely a point of exhaustion. And I think it's important to realize that just because we're here and we are in the middle of the malaise that I've been talking about for almost a year now, that I feel like we definitely need to just slap ourselves in the face and get create a level of interest and a level of scrutiny so we're not just dismissive. And we've seen that twice now on Bitcoin, individual days, bounce back days. Bitcoin is still clearly just negotiating in a rather sloppy method, this type 1 reaction, taking its good old time. Looks like that. And we did register. This is something I mentioned last week. We registered this recent Harmonic Strength Index pullback. That was basically taking this entire, since this last reading, all the way down here. Okay, way back in April. That was the last time we got any kind of a trigger on that. I think you got to look at, actually, let's go to the Binance or crypto.com, because a couple of them did register and others did not. And that literally can, like, here's Poloniex, and where's the other one? The currency.com actually did register an HSI down here. Not every exchange did, but we'll get into some of the other data feeds that clarify that this is still, despite this really heavy sideways action, we're still in a type 1 reaction. So for what we've been talking about the whole time, simply looking for type 1 up to 34,100. I suspect that we could tag that pretty quickly and then go back into the return phase. So don't be surprised. I think probably the critical thing to be aware of is that this could be a bull trap where it looks strong, looks like it's finally going to come out of the lows, and then we go down to the return for the retest. I think we want to look for, but we said that the 30-day count really started back here and puts us around the 13th or the 11th, essentially in a week, where from our perspective 30 days is up. That would be the official marking of saying, okay, we need to look for some kind of immediate change. Appreciate it. Thanks. I want to look at that relative to some of the other patterns we've outlined recently that are showing some signs, better signs of reaction. Here's Avalanche. And let's go to, I think, the weekly. Avalanche was, what was that? No, it was on a daily, my fault. And it was on the other feed. It was on Bitfinex. Here you go. Nice. Most of the major pairs that have these patterns have hit massive 886 retracements. And they did kind of a dud reaction on the first move, but now they're clearly trying to stabilize here. I think we could look for some kind of reactive bounce. We're still in reaction territory across the board. I don't expect any kind of major development until something larger can take shape. I'll get into what that could be momentarily, but just take a look at this check back phenomenon, if you will. meaning there's our terminal bar off of that massive pattern. And on the day Avalanche hits that at 25 even, really 25.006 cents, we have gone sideways, much like Bitcoin has. And how many days? Well, we're almost at that 30-day. I mean, it's all relatively the same. They're all following the Bitcoin move. June 12, June 11, June 13. Basically, we're talking a week from today is going to be incredibly significant for how we look at these situations. What do we want to see? A trigger within this exhausted zone. HSI is not there yet. Amplified, okay. Something I mentioned on a few other of the pairs that we looked at last week, the fact that we are getting some progress above the 50 line. Not all of them are there. Some are. And this is what differentiates the condition of the zone versus, say, maybe 30 days ago or 20 days ago. We are looking maybe that this could give you some kind of impulsive reaction. And that's about it. We're not really fully in the position of confirmation, but structurally, these all look exhausted. These all look like they are just scraping at the major harmonic level that I want to pay attention to, because it's not a random fact. It's not random by nature to have a massive, and go back. I mean, look, this is a year long, almost 10 months in duration, massive 886. And just so I can trace it out for everybody, it looks like this. From that high to low all the way to the 886 is, dead on the money at 25 bucks. So that's something to take note of. And the fact that it doesn't have ideal confirmation, that's okay, because as we've seen in many situations before, we could do a bumpy consolidation here for a little while and then maybe trigger something much later in a few weeks or another month. That's why we only assume reaction. And I think if you're looking to take this trade even without confirmation, I would be looking at these retests of these major XA levels, especially BAT patterns and crab patterns that are retesting XA. Take a shot, risk the prior low. Very low risk in these situations. I mentioned that last week. For some kind of nominal bump. And you could even think of it as a 10 or 20 or 30% move, where if Avalanche moves 30, 35, and then rolls over, hey, that's tradable. That's a nice move. For now, okay, we're still dealing with some very tired, exhausted harmonic patterns that, haven't given us the massive confirmation that we want to see, that follow this proper sequence. Really quick, let's check the Bitcoin chart. We know what this is all about. This is the crab pattern down here. Let's go to the Coinbase feed. That's best. And we are running into a counter HSI signal out of the zone. And this is something else I'll be looking at over the next couple of days, where your 1618 was at 25,720. And then you go into full dud mode, sideways, no confirmation, no continuation. Then we generate HSI bearish, where basically 32,000 is that check back level, and that's something tonight, tomorrow, we're going to see how that behaves. But 34,100 is the mark that I would settle for. I really do want to see that develop, and then we come back in for the retest maybe later this summer. That just seems to be how this thing wants to shape up. Would be great to get a back-to-back pattern, and I think we can go back to our classic historic patterns that really set off everything. Look, this is as ideal as we could get, and this was what happened in crypto preceding the prior bull market. We're now back into a bear cycle, but we did get a type 2 off of the BAT from 2019, and then once we got going, type 1 and came all the way back down. But here is, again, we go back to some historic examples because I think a lot of people do want to look at crypto repeating itself. I don't know if that's necessarily the best way to go because I believe markets and price action cycles, they rhyme more than they repeat. So that's why harmonics are so effective, because they measure the relative proportional movements. We're not doing standard one-to-one measurements straight off. We're looking at relative proportional price action levels. And check out this. I just wanted to bring this up because the current crab pattern we're looking at on the daily kind of reminds me of what happened here back in 2019. You came all the way back down, slammed it, from 20,000 back down to about, what was the low, 3,200, 3,100. And you would have thought that, hey, that low, that bear market low, well, since that was it and hit the level, shouldn't that explode? That's not what happened. We hit the level, and this is, mind you, a weekly chart. Okay, spent the better part of about 4 or 5 weeks until we got some kind of confirmation variable. HSI, normally, that's what we look for. And still a rather dead, quiet period here of at least 10 weeks before we even got out of the zone. There's just a lot of familiar characteristics that we're seeing. This is weekly, current situations daily. But one of the keys will be looking for this phenomenon, this crack above the 50 level in amplified, which happened here. And how many weeks was that? That was since terminal bar. There's the original terminal bar. Yeah, that was 18 weeks until that even, more like 17, 16 weeks till that really broke out above the 50 level. And targeting 9,700 from 3,800. Okay, 250% move, almost. That's the kind of thing we're looking for on the daily chart. And you would simply ride whatever this trend line that pops off of here. Again, we just ride it until the trend line breaks. That's always your last consideration, especially type 1 reactions. Once that thing violates the uptrend, the reaction trend line, you're done. You anticipate the full retest. And this is, very much the scenario we're facing on the daily. Come back down. Let's go to Ethereum quickly because that was the one I said we need to pay attention to over the weekend, and it survived for the weekend. Boy, 1,700 scraped it. Here's another beautiful 2019 pattern, and look what this did. Massive, beautiful. I mean, that's just a beautiful bat pattern. That's kind of like Avalanche currently. Currently, that is like Avalanche and many others. So how do we pinpoint such an opportunity without having to sit through 15 months or more of sideways action? Because take a look. There's terminal bar right there off that bat pattern. We didn't really get out of the zone and get going, or at least up to even to target 1. How many weeks was that? Remarkable, 105, 106 weeks till we even got to target 1. It happens. It's not the ideal situation, but let's be aware of the fact that that can still materialize in this regard and be a valid pattern. We'd want to look for those HSI triggers, which we don't have on a lot of the pairs, but this is where, if we're in a delayed kind of a reaction, we eventually got it. It's the whole key is focus on what that XA level is, and let's target these retests under the XA with some kind of bullish trigger. That's what Ethereum did, and currently, Ethereum at I'm saying under 1,700, Ethereum's done. I'm not throwing it in yet, but we've talked about this situation Let me get to the, I think it's Binance. We've been this big pattern on Binance. Yep. Bybit, Coinbase. Sorry, let me go to the right one. This is it. I mean, 1783, 1804. That's absolutely what we're looking for. But take a look. No confirmation yet. And this is a type 2, so this is something where not surprised to see this take more time. I will start looking, though, once we break above that 50 line on Ethereum. I'm not there yet. I'm not even favoring a bullish bias until that happens, because this thing could roll over and then begin the continuation. This is similar to many. I mean, there's many of these that are shaping up. Go back to the weekly time frame. Go to that. Let's go to the Binance chart. Oh, let me go back there. Binance on a daily. That had the, yeah, there you go. Preceding this had a, where is it? That big 886 from before. My fault. Hold on. Bear with me. There it is. Hold on. Sorry, I just lost that chart. There it is. All scrunched. So this is definitely an area I want to look. I think the price action is mimicking what happened 2019, 2020. Tired, sluggish, doesn't look real positive, and will give us plenty of signs once it starts to get going. Here, we're just kind of walking the edge. There's really no advantage until, and this is the other thing I want to look for on Ethereum on a weekly chart, we are getting some kind of inflection, but that won't really register until the end of the week. Plenty of time here, folks. This is not something I want to chase. I still say that any kind of opportunity is going to be a reaction. And here's another example of those reactions is Cardano, that did a sizable bump move. We did get an HSI trigger, depending on the data feed. Some have yet to trigger. Others did. Essentially, Cardano trying to trigger off of that prior low at around 47 cents. The all-time 886 on Cardano is still a bit lower. So, again, not anything doesn't have all of the elements that we want to see, but we're down there structurally enough that it's at a deep retracement that I want to pay attention. 36 cents, 37 cents is the general area, but I want to look at, give me some kind of something in this level. Give me something back down here, HSI check back, or even, there's another way to know that we're still quite early. Simple trend line needs to bust. A couple more. Here's Algo on the daily. Okay, Algo, like these others, are scraping hop levels that we talked about last week. Algo's around 36 cents, 36.5 cents, trading 40. Just be patient with it. I would line up several of these, and let's see if we get another check back against that XA level, or at least some kind of amplified RSI to break above your 50 level to there, to be able to get some kind of movement off of that low. I think it's absolutely trying to stabilize. You're trying to bust above this 50 level, but until you do, all right, let's just be patient on this. let these tired patterns work themselves out. We got 38 cents on Cardano at the low. I think so. That depending on the. Thanks, Claire. There was there were a few that got under 40. Most of the feeds got to about some got under 40, got to about 40 cents, and then they came back in. I do think these are extremely oversold, but due to the current environment, you don't have massive money flow coming in to create a reaction. Here's Anchor, another one. We've mentioned this. I think this is more about percent movement, where you go from 3 cents to 5.5 cents. 75% move. That's how we need to think, and then maybe come back down later in the summer. But if we can get above that 50 level, essentially from where we are currently, and bust above the 50, a close above any of these highs, or 4.1 cents, 4.2 cents, will trigger that larger move. But again, still reaction. And this has got reaction written all over it. Non-confirmation on the first test. Okay, no problem. We can still see opportunity. But that's about it. I think this 50 level starting to rear its head on amplified RSI is the first time since the low, since hitting the numbers, where you've seen some kind of progress in the internal strength. Yep. On total 2 and 3, let's go to them, Ziggy. Appreciate that. Let's go to the total crypto caps. On totals, who loves them totals? Total crypto market cap here still hovering 1.2, 1.25. And again, all of these are in the same position, folks. Looking to try to do a bust move for the first time. Come off of that 50 level, out of the oversold, and then come to the 50. We tried to bust it last week, could not follow through, got smacked back down. So again, 1.09 is the absolute limit on total crypto. And then the breakout point to be able to get above that is 1.35. And we do have this bat pattern, rather ugly bat pattern, but just reaction. You were saying total crypto 2 and 3. What's that on the weekly? Oh, there's the weekly total 2. Thank you, Ziggy. Appreciate that. Shout out. So one of our regular Ziggy saying Harmonic Pattern Collection is generating a beautiful bat on the weekly, which it is, and that's at around 715 billion is your XA886 level. This is a little bit different than some of those others, because here on the weekly, we did get an inflection last week. We're trying to come out of the zone, maybe with a pop this week. If we could get it, that would give us an arrow. It would give us something to suggest that 9-week decline is over and we get some kind of relief rally. That's about it. But that would take you back up from 715 to 1.02T. Keep an eye on that. That's where this RSI indicator, amplified, or even you can use standard, but we need to see that pop out of the zone now. This week, by Sunday, there's total 3, much the same way. Appreciate that, Ziggy. The total crypto is excluding BTC and Ethereum, so maybe we get some life breathing back into the alts if we can get out of this oversold extreme. Otherwise, if we don't, we're going to take a lot more time. This is, again, clearly, look at the price action on coming into this zone. Disastrous. I mean, absolute disaster, straight on in since the peak at the end of March. And this was 9 bars, 9 weeks down. 9 weeks? Yeah, 9 weeks. So let's see if we can get above. That's 474. 474 billion is the XA 886, and you're trading 434. Having held this for, that's pretty remarkable, despite the last 4 weeks being down. The last 3 have not violated that capitulation low at the 886. That's something, again, where you got to take note. Beautiful pattern, beautiful BAT pattern off of last year's low. All right, and your 886 is at 474.5 billion. The absolute low there took you down to almost 400 billion. That's okay. We still utilize whatever that extreme limit is, however much overspill that terminal bar registers. And terminal bar means the price bar that hits the last number in the zone. So that individual bar is the official completion point of the pattern. Not surprised to see a couple of bars to go sideways. Try to stabilize here. Again, still a type 1. It would still be a type 1 best case scenario. I just need to see indicator to pop out, HSI to pop out, to be able to get us out of this hole. That has to happen by Sunday, without a doubt, by Sunday. The 200-day moving average, 200-week moving average is on the hop. Yeah. We have to just, look, be patient. I think we're all a bit exhausted with this year's action. No doubt. It's been just devastating haircut. But still continues. Quick update on 1 or 2 more of these is another one that I talked about. Still holding. Chiliz. And this is another grab pattern on the daily. It's a lot like Bitcoin. This one's actually a little bit better because we have a sweeping movement of higher lows. Not necessarily so much higher highs, but at least these lows are holding. 17.5 cents is the number. But certainly getting into the 30 bar dilemma. What do we do if this does not continue? Let's say we're 30 bars. Let's say we're a week from now and we're a month after the pattern completion. What are you going to do? Well, it depends on where we are. This Chiliz, and I mentioned this last week, or at least especially on Thursday, has broken above the 50 level. Maybe one of the more advanced developments of all the patterns we've been looking at. And that, for me, okay, that's in a better spot than many others because we have broken above the 50 level. Also notice some consolidation here as we hit 50, but that's actually constructive because you didn't roll over. You have a few days of bouncing around here, but we are persistent and trying to pop higher. This is probably leading the pack versus something like Avalanche, which is still needs more time. Let me go back to this one. Here's AVAX. Again, not nearly as advanced. Look, this is under the 50 level. That's why Chiliz is in a better spot. But those are the developments we want to see. One other one, BAT, basic attention token. Another deep crab. All of these patterns are a great sign. It's the first start. But this sideways grind for, 20 days now? Yeah, that can be exhausting. It can be very tiring. As long as we continue the progress for BAT, as long as we can get out of that, above that 50 line, and that will probably go tomorrow, I would think. Let's see what it does. It tried to pop today and then got smacked back down. We're going for target 1 at 55.5 cents. It'll trigger when we break out above on amplified RSI above 51, 52. Appreciate it. Thank you, everybody. Thanks, David. How you doing? Jordan, what's going on? Yeah, we'll get to Nasdaq in a minute. Right back down. And again, Don't want to go to sleep on these beautiful bullish patterns, but we want to be honing in on specific technical events that will at least light the spark to get something off of this bottom here. Let's go over to, let's go to Nasdaq right now. Oh, really quick. Here's the Bitcoin futures. Okay, Bitcoin futures, BTC continuous contract. This is another one where it's all about the 50 line. And this is amplified RSI. Right there. You need to break out and do something from here to at least get you to about 34,200. And then we see. I mean, it's not eventful. I mean, this is not really exciting stuff here other than watching a slow, just kind of a slow reaction take shape. But that's not what we normally see on the first test of these patterns, especially a crab pattern. Crab patterns should be a lot more responsive than we're seeing it. So not ideal, definitely tired price action, but we'll still follow it. Because the thing that when BTC futures gets back up here, then the return phase should get rejected pretty hard. I think that would be a real kind of a bait and switch move, if you will, where looks like Bitcoin might finally do something, get above 34,000, and then run into a whole bunch of resistance. Like, go get oversold here. Go from the 50 line oversold and then back down. The other thing about BTC futures is the green line did go on right there on amplified RSI daily. But that's just a starting point. We look for that to come up, register, and we would still want this for the secondary retest where the larger confirmation maybe comes in next month. But for now, stick with it. It's it definitely, crypto is a tiring market, tiring sector at the moment. Some other markets a lot more exciting than what we're seeing now, but we have to be patient. Remember, this is a marathon, not a sprint. Nasdaq, we were up in the morning, now back down. What's going on? What are we going to do with Nasdaq? We had a couple of days last week where we were trying to come off the hop level. Couple of things to take note, and this is much like crypto. On our 50 level, okay, we had oversold readings back in May, and we did pop above not only this 50 line here, but this prior 50 reading that lined up with the last, or at least the first test of the zone. That's critical. This is critical. This trend line on amplified RSI is critical. The problem with it is that you take out your squeeze within this range for Nasdaq. So again, you take out these lows at under 12.4, you're going to go back and retest hop levels. Other thing that's going on here, not what does not link up with the bullish pattern. And let's bring up HSI because we have an HSI bearish reading on the continuous futures chart. There you go. Okay. And we did hit an HSI oversold last week. That's really a problem. That tells us more time will be required. Actually, you can't see it because the arrow, you can't see it because it's, there you go. Let's blow it up. Right there is your HSI arrow at 12, was it 12,940? 12,950 basically. Let's see how we end up on the close today. It tried to open it up. Let's look at today's action, the 5-minute chart. Actually, we had a great, remember that crab pattern when we finished the session on Thursday? That thing got smacked last week. And there's the deep crab from this morning. Right at the hop. That's just beautiful. Hop level, incredible. Down almost 300 off that hop at 12. 801. Hop level stands for harmonic optimal price. We talked about that on Thursday. And again, if if you're looking to optimize your trades and you're looking for the best opportunities, wait for the hop. Wait for the hop with confirmation, especially on things like deep crab patterns are, I think, the best structural opportunities. Why? Because the hop level is that final overspill gauge, meaning the measurements, the patterns, they give us the ideal zones, but we know that real world trading can exceed the zones temporarily, nominally, still okay, still valid opportunities as long as they give you clear reactive kind of individual responses off the levels. I mean, notice this hop. This is something else that difficult to understand until you've gone through a number of examples, but here's the open this morning. Okay, your 1618 right at the open they tanked it, and they threw it down over 100, and then within 30 minutes you're back up to the hop again. That's extremely quick response. That's the opposite of what we're seeing in crypto. But the fact that you reacted so strongly on the first test and then you come back for the retest on the type 2, and then look at what the hop does on the 5-minute chart all morning long before we came in today. All right, hits it 1, 2, 3, 4, 5, 6 times within this zones and then rolls over. Recall what I said about these trendline violations. You violate the trend line going into the zone or even in the reversal. That really helps to kind of really cut off the kind of the excessive action. Once you violate a trend line, you're in business. And hop level on like a 5-minute chart, a really nice intraday time frame to be trading from. Probably the 5-minute, you're not going to get as many patterns, but when you do, I think it's pretty clear how price action that responds or can't even get through something like that is indicative of a larger potential move. Also, since it's type 2, we know that we're looking for target 2. No matter what, every time. That's the rule of thumb. So you're at 12801. Okay, you're looking for target 2, basically 65 lower from that current level. And now we're well beyond that, because here's the thing about a lot of these larger moves, the home run moves as I like to call them. You will get your home run moves simply by staying within your framework. Why? Because once you get down to your target level, the biggest moves that develop are going to blast through your levels, not only in terms of momentum, acceleration, but continuation. So if you're looking at that setup and you get to target 2 within a few bars and it's a strong down move, that 5-minute bar took you down 50, 60 points, and then you have no confirmation down here and the follow through just continues, so be it. That's how you get the bigger runners. Now where are we currently? Yeah, we're trying to give you another 5-minute HSI on the downside here, trying to get out of that zone, but nothing bullish yet. And the daily time frame is still the make break for everything, folks. I think we still want to pay attention to the hop level at this 11,848. That's been it forever. Now I'm watching, because we do have a bearish HSI in a bullish zone. I have talked about that before. What does that mean? It runs counter to the bullish pattern. We already know that this pattern is tired, definitely, taking a lot longer to get out of this zone. Now that we have a counter signal running against us, what does that say? It says the reaction just couldn't get out of the hole. It couldn't give you what you need. So it's going to take another trigger before this could really materialize. I would look for something, maybe back down in the zone, HSI to come back and trigger maybe another 10 bars, 20 bars. Look at HSI though. That just registered. I will say that this is done, and this is what everyone should be looking for into tomorrow, is that if we close down and we close under the 50, we break this uptrend line, look out. We could go all the way back down to the hop level before we see something else. I don't know why that's not giving me the... Let's see that. And of course, HSI being the type of indicator that it does run from extreme to extreme. That's how I designed it. This one, all the way back there, did go from oversold to overbought, but the original trigger did not come into the right place. Here's pattern completion, but we want confirmation to the right of pattern completion. Not happening. So this running type correction move tells us probably a lot more time. Not what you want to see. Absolutely not if you're looking for a type 1 reaction off of this zone. Again, a close under this 3-4 day range, under 12,450, will really set this into motion for a deeper retest. This is already, we can see this is already going to take more time. Where do we register the next opportunity is going to depend on where HSI, how that comes in, and how many more bars we go sideways. There are a number of patterns, I've mentioned this before, that in the Nasdaq 100. Absolutely. Here's Starbucks. Talked about this last week where beautiful deep crab down at the hop. Our confirmation was around 81 right there. Let's look at HSI. Yep. This, love Starbucks. I think it's, I would almost consider this a forever stock at the right price. Forever stock are those companies that, they're going to ebb and flow. You might go through 30, 50% corrections, but they're the kind of corrections you want to look for long-term opportunities. I mentioned Hershey's and Walmart and Target and a few others that are, things that if you're looking for long-term investments, you would look at these kind of patterns, but still want to see confirmation. Your confirmation came in all the way back here with nothing. 0. And you're almost at HSI overbought already, which could happen, I don't know, in the next couple of days. We would still want to look for target 1 at 97. Let's see if that can take shape. But again, if these roll over, if the stocks can't follow through this week, and certainly by next week where a lot of these are doing, they're going to complete their 30 bar cycle. A lot of these made major lows back in May. And now by next week, we'll see how that shapes up. I mean, your 30 bar hop test from there, all right, puts you probably, somewhere in early July. Others are more like mid-June, end of June. I like this. Come on, it's Starbucks. And it's 40, 50% off the all-time high, and you got Harold Schultz back in there as CEO. Okay, great. You love when the founders come back in to the old companies, as usually historically good for the company. But I'll have to see how this shapes up into next week, because if we roll over again, there's only one spot for these, and that's a full hop retest at 72. Not anything I want to be a part of until it confirms, until you have a real nice ideal trigger. Let's do one or two more. Zoom, another one here where this is weekly. Weekly is a massive bat pattern. And again, finally got a reaction off of the low down here around $90. First test kissed about 120. We started talking about this back in March or early April, and I said, look, this has got plenty of time. Even your CD, here's something. your CD downtrend leg. The leg, you take the CD leg, okay, and you just draw the obvious move into the zone off the CD leg. You have to break out of that. So we finally did several weeks ago, but still no movement. I would say this larger zone between essentially that low at 80 and 886 at 120, that's your support resistance for now. And within the zone, I'm looking to locate the trade. Go to, say, daily time frame on Zoom. There you go. There's the range. And oh yeah, look, HSI just triggered on the daily. So what does that tell us? Probably more consolidation in this larger range. If we could get some kind of retracement value, I'll look for this to come back maybe. Look, HSI already triggered down, amplified, a double test, almost a little mini divergence. All right, all of that are signs where more consolidation is required versus, say, the last reading. We talked about this on Thursday too. That HSI reading at around 89, 90 bucks was great for a short-term trade off of those numbers. You had HSI there and you had amplified there, which is different than any other signal in that zone. Now you have it on the bearish side, HSI and amplified. I've got to respect that. So again, this stuff still needs time. These are going sideways for a while. I want an ideal trigger in this zone, but it might come, might take another 30 days. It might take another month before something larger comes together. Let's look at, what's the other one? PayPal. Okay, PayPal, another one. Look at that beautiful Gartley. Amazing, right at the top at 300. Right off the hop level too at 313. That was back in August last year. Yikes. Weekly on PayPal. I think this is, wasn't this a shark? Hold on. I must not have this up properly. I know there's something there. There's a 5-0 or shark pattern here. Let me take a look. I know PayPal's sitting at that 886. Yeah, I don't know. Here we go. Missing that pattern again. Let's look at the weekly. Is it this? I think we had a manual shark off the COVID low. Maybe something like from there, off the prior high. Let me come back to this. That's not really what I want to see. There was, no. 314. No. Let me come back. I don't think it was PayPal. Although deeply oversold, not there yet. What was the... it escapes me at the moment. Come back to this. PayPal, although you do have an HSI reading, again, not a heck of a lot of reaction. I would still look at this 80 level. Where's that? 77. The thing about PayPal, at least you're above, and this is exhibiting something, above your 50. The midpoint of 50. So again, if this was to roll over, break the trend line, that would be, you'd go back and retest lows. I can't, it escapes me what that was. Another one, Cisco or Oracle. Go in here. Here's Cisco. Beautiful deep crab. Beautiful. But look what happened into the zone. Amazing 1618 off of last year's that prior peak low to high move, and perfect. I mean, deep crab, perfect deep crab. 1618 was at 42, terminal bar was at 41. That's the kind of reaction you want to see. I would still say type 1, come back for the type 2, and then you go. But your confirmation, not really there. No HSI. So let's take a look. Cisco. Oh, this was the other thing about Cisco. Notice how it can't break out of that 50 level. So Cisco rolls over again. That's going to give you yet another sign of retest. Maybe 42, 43, not far from where you are. And then we would trigger. This is, again, these get so exhausted, but then they take a good bit of time, maybe 30 days, maybe 30 days of a consolidation to come back and retest terminal bar at 41. Not the kind of reversal, or at least even reaction, that you would see off of a major move. One or two more. Snap. Yeah, you want to look at Snap, Jordan? Sure. Here's Snap on the daily. I'm not a fan of Snap. I think this is a busted chart. Weekly was that? Weekly Shark, he's saying. Ooh. All right. And wouldn't we have killed for these patterns a year ago? I was trading Snap 35, 40 up to 70. Trading some things off of Snap last year. Trading a lot of call action last year in Snap. And then luckily I was out of that. But that shark pattern, okay. Certainly structurally, that's the thing we want to see. Beautiful formation. This is probably what most of the charts that are going to retest their 886 retracement will eventually look like. I still say that most markets will probably have to come back if we get into a real devastating slide later this summer. They're all going to have to do something like this and hit an 886 from the COVID low to high. There's COVID low, all-time 886. I mean, that was down there at the low was 7, and that was a 10x move above 80. I like that one, but still no confirmation. I mean, this is extremely tired action. Look at how many weeks is down there. 3, 5, 9, 10, 11 down weeks. Not something you want to jump into, because I would want confirmation. And look how deep HSI is here on the weekly. So the problem with when you're deep oversold like that in the zone is that they could just keep sliding, and they could go under terminal bar. Terminal bar is 1255. Even your amplified reading on Snap is deeply oversold. Speaking of crypto, let's look at one or two of the crypto mining stocks. Let's look at, say, Marathon. Okay, all-time 886 already. Back down there. Daily time frame for this. There you go. Amazing ABCD at 81. Amazing. Oh, wait, let me get back to that. Where is this all-time 886? Like that? Yeah, 886 is at $9 on Marathon. We do have confirmation too on the daily. Are you bouncing off of that? Can that give you anything? Anything? You're not really there yet. The problem with these deep 886 is that once they hit, especially after such a move like that, spending the better part of 8-9 months straight down, is that you don't have anything that has developed. We're at the 886, bang, okay, we have our first confirmation value that comes in around 982, and you're trading as low as 850. I don't have anything down here. This might get a reactive move, but I would love to see a pattern that converges with that long-term number. You don't have it. This is much like Riot blockchain. There's Riot. Just devastating. I mean, another 75 to all the way back down. Here's the all-time 886 for Riot. That's at 10. It's probably not even, it's actually a little bit lower than that. Why is this so sticky today? I think it's about 850. About $9. But nothing is there. We don't have any pattern. We do have an HSI here that just triggered 2 weeks ago at about 676, but just nothing. Nothing there yet. Nothing that I would want to jump on. I just feel like, again, this could take a lot of time and go sideways before it even triggers a pattern or something larger. Here's MicroStrategy. This all-time 886 is completed. Look at that Gartley on the daily up there in October. Yikes, that's perfect. All-time 886 on MicroStrategy. Sorry, Michael Saylor. But again, looks like that. There's your spread at 228. Confirmation came in at around 198, 195. Right there, 193. But no pattern. What's the weekly look like? Oh, I know about the other thing about MicroStrategy we should look at on the monthly. It's done this before. Done a massive parabolic move and then come all the way back down, do the 100% move like this one. Yes, that was a real move. That was the Y2K crazy surge all the way up to 3,000 back down. Took out the prior lows. That's why I think this is a tired move that still needs more time. Jay says most of them are at the 886s. I think a lot of them, most of them are. Most of your altcoins and your major crypto related, especially the tech, the new tech that's come public in the last few years, they're all down at their 886s. The ones that aren't, we probably need to wait for them or a major pattern to develop. But, absolutely needs more time. Ziggy wants to look at GBTC. Sure. Here's a Grayscale Bitcoin Trust. Essentially the ETF. I do know we got this Gartley here. Now, that is something that I think you sent me an email on that, Ziggy, and I appreciate it. We do have this massive ABCD. The gray color of the Gartley says it's still in development. We haven't hit the 886 on GBTC. That's at 1640. We do have a completed ABCD pattern right off the top, and that is a major structure, but it still does not officially complete until we get down. Essentially, this hop level for the ABCD and the terminal bar retest, all of that is at 1640, and this one should not violate because of the alignment. You have a beautiful M formation starting from April COVID low. Your 618 dead on. That's the marker for the Gartley always. The marker for the Gartley, depending on where that 618 falls in, and then how your A to B, C to D lines up, has to line up with a 786. Because you have a really tight ABCD, your 786 is going to be the bottom range of the zone. If it was a BAT pattern, we would look more towards the 886, but because this has that unique Gartley configuration with the 618, and that's where it all started, folks, the differentiation of the BAT versus the Gartley for me was the real breakthrough. Years ago, people that were labeling M and Ws were calling anything a Gartley. But my work really with saying no, we have to differentiate B point, ABCD alignments, even your BC extension, that all matters. That we look more at 16, 17 area, not the 886 at 10.24. And that 886 would have to be your maximum overspill range. But for now, I'll just look at I'm going to look at 16 to 18 bucks. We do have on the weekly a little inflection going on early, but HSI is coming out of the zone. Needs to pop like that and then amplified do the same. But we haven't registered it yet, and we still need the arrow. So this could be this week. We could get some kind of push out of the zone. I want to see this materialize sooner, not later. You don't want to just waver down here for weeks and go sideways. I mean, you look at even hitting the zone. Sorry about that. Let me get back here. Take a look at the zone. Look at how many red candles in the zone. All red. Going on week 5. I just think it's, that's not the kind of paint you want to see into a zone. We want to see at least one bullish candle. Hit the zone, complete the Gartley, and then give me one bullish candle to set us off. That's not what's going on here. So more time until we get some development like that. I have to get into crude oil, folks, because it is so critical. And again, massive week and critical week here. We're trying to retest that all-time 886. We did manage, depending on what your contract month was, but let's go just to December, for example. We are breaking out, okay, on these contract months. That matters. Take a look. You're going to see it better in individual contract months than the continuous because of what happened 2 years ago, 3 years ago with going negative. But I tweeted about this last week. Again, they're all getting above that yellow line, breaking out above the prior high from last March. That's basically when this all started, the craziness. And the thought on what these will do is leading up to a 1618 extension. This kind of development where you have these, just draw the trend line. You have sweeping lows continuing, higher lows, higher highs, consistent bullish candles with very short corrective phases. 2-3 day corrections and then right back. 2-day correction, right back. Maybe a 2-day correction, right back. All of this leading up to what I feel will eventually be a 1618 breakout. Above that level, that's depending on the contract month. Again, the front month is higher than these back months, but it gets you above 130 on the spot. These others are, let's look at this one, basically a 120, 125 on these back months. 120 for the December contract, December 22. Take a look at something like USO. Oh, here we go. Do that. USO. Daily. Another pause. But this is a dramatic, just non-stop, massive move. That's essentially the opposite of Bitcoin. I bet you if you overlaid these two, Bitcoin with crude oil starting in December, you'd see almost a complete opposite correlation. You do have the software picking up kind of a deep crab around 90 bucks on USO. That's okay. That's okay for now. Check out, at least indicators are trying to give you some kind of inflection or pause. but you're deeply overbought. So these need to come out of the zone and be really clear before we would even assume some kind of larger pause. What I think might happen is you get into kind of this high accumulation stage of amplified staying in the overbought and going sideways. That's why any breakout of follow through up on these levels will really get this going further. Take a look at this kind of a development. Go back to January. Yes, we were overbought. Yes, we were hitting patterns, but the price action sailed right through, doing a sideways pause, but then continued higher. And that's where we are on HSI. It's actually the highest reading on the daily on USO in a long time for the year. And you have to go back to the big breakout move early 2021 of the highest reading there. And that's a breakout on the indicator. That's really a sign of strength coming further. And we had that actually on Amplified. Here's Amplified. It's way overbought. But that new high and pressing up almost to 100 tells you, wait, this is strong. It needs to do a retest, needs to more time to consolidate before I'll even surmise that anything is going to roll over. Just need more time with these trends, and despite it being kind of tired action, which it seems, they're pressing more and more. I mean, just it's nonstop. We see that in things like Chevron. This is one that I've mentioned long ago, and this one and Exxon Mobil on the daily time frame. You want to monitor these. There's no bullish pattern here, but you did get a lot of pressure relieved on this in the last few days. This massive inflection, basically 175, just started to pause sideways. But if we come out of the zone, and we could this week, and get you going for yet another leg higher, and I would expect that to keep going until we register another overbought on Amplified RSI. This has been a remarkable run off the low on Chevron, and go to the weekly or even monthly, because I think a lot of these, let me go to the monthly. A lot of these won't stop until we do a massive 1618 kind of a move up off of that. Yeah, we've got a crab pattern. You are type 2 up here. But your hop level is 156. You're well above that. Maybe it's still early. Look, HSI is trying to come out, but that won't actually register until the end of the month. And Amplified is deeply overbought, but hasn't rolled over yet. It's a tricky one. Let me clean this up. I'll remove the 5-0 pattern and just isolate the crab. Looks like this. Oh, let me take off that other. There you go. So on the monthly for Chevron, yeah. You could say it's a run at the hop level, but failing. No confirmation there. No confirmation yet. Andy Sky is asking, are you the only one who thinks trading is scary? You know what? It's not so much scary as just recognizing that we are in a completely different environment than a year ago. The easy money was 2021. The hard money, it flips to almost the opposite environment for 2022 and will not change until we get some significant signs of, say, crude oil rolling over, inflation. Those inflation charts look crazy. I'll probably look at a couple of those tomorrow ahead of this week's numbers, because we've looked at year over year inflation, and those numbers should go double digit. I mean, you forget 8%, 9, we should see 12, 13% if the patterns work out on those year over year charts. We'll look at those tomorrow. But look, we've got this, and then today, nat gas, again, another Massive move in nat gas. Nat gas is up 30-40 cents today. Nat gas is extremely volatile. I got to clarify this, that nat gas can be up 20 cents one day, down 30 the next, but the larger trend just continues higher for nat gas. Go to daily. There you go. That's a massive move. Massive. Our favorites say UNG. Remember we were talking about that around 14, now 31. We had talked about UNG down here at 13, 14 off of the crab and these bat patterns down here. Now you have a big deep crab that looks like it's failing. There's no confirmation, and look at how many days we are here. There's terminal bar. Little reaction, but continuing on this uptrend. And until we got some kind of amplified or HSI, which we have neither one of our indicators are overbought. Then what do? You default to the longer time frame. You have to go, if your daily's failing, tell me about the weekly, or if your weekly's failing, go to the monthly. All right, nice, beautiful crab pattern, no confirmation. And I would target the hop at 33. Ziggy says the crab markets, the patterns with crab patterns are hard to trade. They're hard to trade without confirmation, and they should only be reactions. That's how they normally work out. We see that in Nasdaq on the bullish side, and we're seeing it now on the bearish side, where look, we'll get another pullback, no doubt, and we'll get another opportunity. Why? Because when you go to your monthly charts, especially if this fails, take a look at what UNG has done in the past. Long-term ranges. I think I mentioned this last week that UNG on the monthly, also USO on the monthly, they have massive patterns that if you go back to history, UNG was over 100. You're trading 31. So tell me about the long-term trend. What's going to happen here? You get a couple more months going higher. I mean, even at a minimum, your static highs are 38 to 40, something like that. All your targets are still higher on all of this until we can at least get to target one. That's at 56.90. That's how you get the big moves. I mean, this is, and oh yeah, all time. Just so you know, look at all time. UNG monthly was at 2,000. Now that's split adjusted because of all of the, the long-term manipulated bear market in nat gas, which it was. So I think 56.90 with that clear crab pattern on the monthly is not crazy to be considering. Sure, we got to get above 33, maybe get above 40, but once you do, it's gone. We haven't seen acceleration yet. You believe that? We have yet to see acceleration in nat gas. Remember, NG has got the massive pattern, the type 2, on your monthly. You go back 15 years. And I've been looking for the exact session where I first brought out the idea that this is possible. It was at least 2 years ago. I think it was on the private members page, and I'll get that and post it. But if we're to believe that we're in a type 2 return, which we are, then your 1618 at 1488 is probably where you go. Boyle, yes, Jordan. Boyle's the other one. That's the triple ETF or the double nat gas ETF. What is that? Yeah, it's the Pro Shares on, I think, the weekly. Weekly or daily for Boyle. 130. That looks like, man, on that chart, remember when I said this could go to 260, 250, 260? Yeah, I think we get above the 130 level. We do have some things at the 130 level right now. There you go. We have this crab pattern, but look, It's in a type 2, beautiful type 2. And as you said, hop level at 151. 151 on Boyle. These are minimums, and that's in a type 2 return. We know that that's got to come back and hit the hop level. Until that does, all right, you stay with the energy trade. You keep riding it. Why? Because what happens when you follow the framework? And as I showed on some of those other markets and patterns where the larger explosion, home run trade took shape, it's because we were playing it into the numbers, and then when it got to the number, it just blasted right through. That's what looks like will take shape with Nat Gas. I mean, Nat Gas already flirting with the $10 level. You know, you're above 9. You're not getting rejected. You're 933 at the moment. You've been knocking on this $9 door, third time now, and zero response. So once we get above 10, I think everyone's going to be aiming for all-time highs. That's how those traders really think. They are focused on big psychological levels. Maybe they make a run at 10 and then try to dump it at 10. But once you get double-digit Nat Gas, look out. You're going to have to just play it up to the massive retest of basically $14, $15. And these are minimum targets. Minimum targets. It could go higher than that. Nat Gas could go well above, terminal bar on the weekly is at 1550. Hop level is at 1833. That's not out of the question, and that's a double from here. That's the issue. I mean, I see this, try to put markets together, look at the whole landscape, if you will. Can stocks continue to go up if oil and nat gas are going to spike like this and inflation is going to continue doing what it's doing? I don't think so. And that's why I think we're having a lot of issues on these other markets. Really quick, before I get out today, I did want to show, and we'll talk about this a little bit more tomorrow, but we got to look at the 2-year, 10-year. Okay, here's the 10-year. It's back at 3. And go to the weekly on the 10-year. We have a BAT pattern right at this, and now 302. Okay, we hit the 886. I talked about this last couple of weeks. I talked about this in April in particular, how critical this was. We are trying to go sideways. 290 is the multi-year 886. My point, though, is without confirmation, without anything up here, this hop level is in play. I mean, straight move to 366. This thing is looking tired. This thing looks like, you got multi-year resistance around the 330 level. Notice we have a shark pattern. I mean, there's verifiable patterns up here, folks. The software is doing the work for us. It's showing us the levels where we have to focus on until we get to retest that shark with the BAT pattern. That's 325. That's 330. That's on the 10-year. These are minimum numbers, and the concern is something happens and we explode through. That's how you'll know we're in a real serious next level of the malaise, if you will. And the only other place above this, what happens if this fails? We go to a 1618. What ends up happening, you have to go back to basically the decade range and trace this structure out for what it is. So that last little ditch down to basically zero, that's your perfect capitulation for interest rates. I mean, I don't think it could get any more perfect than that. And what it becomes is an impulsive wave where that whole thing turns into a shark, where forget 350. I mean, forget 330, 350. You go to 5. Yeah, Ziggy, I hear it. You're not going to be able to drive to work soon. And it would not surprise me if you're seeing crazy gas prices. Crazy. I mean, it's not sustainable. And this whole move is not sustainable, but it will continue. That is the tricky part about what's going on. We're in an accelerated, deranged environment led by some deranged individuals that do not care about, they do not care about you. They do not care about what's going on. They do not care that people have to pay 6, 7, if you're in Northern California where I used to live in Mendocino County. Okay, you're paying 9 up there in Eureka. Eureka, California, Mendocino on the coast. That's where they're paying 9.75 a gallon. It's not an aberration. That's a model for basically, what happens when you're for gas stations that are out of the way. That those areas of the country where they can't get regular deliveries. Yeah, $9, $10 a gallon is probably right. And that in that scenario, that's when interest rates spike. That's when interest rates go to 5 off of that last ditch down, which took you to 0. That's your capitulation on interest rates. And then you go to your long term. You have to go to the long term ranges here. Look at the long term ranges. You go back to 81. On the monthly chart, folks, look at what we have. Okay, at this low. This is why we're looking at levels. We're looking at a lot of patterns here that are back to back, things that are really coming together that if we just apply the framework and ask ourselves, okay, where are we? What do we need to see? How far do we need to go? What preceded this action is a massive monthly type 1 on the deep crab, come back all the way back down to the hop level for a type 2, and now we explode. Your target 2 off that crab is 392. This is your 10-year yield. That's monthly. So we already know daily, weekly. Those are already suggesting 330, 366. Off the monthly, these are minimum. 392 is a minimum objective off of that deep crab pattern. Then we'll have to see. But we'll know quickly. That's why we want to, even in this environment, as ugly as it seems, you can't stop measuring. You can't stop laying out your levels. Let the software do the work and show you where it's going to go. I mean, these patterns have been around for a while. We know they have to respond. Type 1, bang, type 2, 392 on the monthly. And then let's go all time. So you get a perspective here. And let's do just a simple retracement. I did this a long time ago. Okay, this was the all-time peak on your 10-year yield, around 16%. That was, I don't know if how many of you were around in 82. I was looking at the markets, but I was still in high school at that time. But I do remember these crazy interest rates. Well, your all-time, run your scale. Run your spread of retracements. All-time 382 retracement, folks, of that major range doesn't come in until 6.2%. A 50% corrective bounce at 8%. Those are historic norms. 6 to 8% is your historical average going back 100 years. We get above, listen, all of our measured levels in this crazy environment tell us minimum 3.3 to 3.66 is the immediate objective. We're not going to reverse from the BAT pattern. These longer term patterns are dictating immediate levels as high as 392. You get above 392, then you fail your daily pattern. You fail your weekly levels. You have to default to your monthly long-term objectives. And this is where they were raising rates and they deliberately were destroying the economy to stop the inflation. The other point to consider, All right, is peak inflation didn't occur until years after the problem was obvious to everybody. I mean, we were in oil shortages 5 years before interest rates peaked. I mentioned this before. A lot of any older folks remember this with me, the odd even days where there was gas rationing, where depending on the last digit of your license plate, if it was an even day and you had an even number, the last digit, you got gas that day. If not, you couldn't get by gas. All right, that will come back. Okay, that will come back. We go much higher on all of this. You're going to see real supply problems. I think the diesel market is on the verge, and from what I hear from my sources, the diesel market in particular is on the verge of a massive shortage. Diesel is also the highest of all of the distillates, well over 6 a gallon across the board and higher depending on where you are. So my point is we have not seen the consequence yet. It seems bad now, but it hasn't even started to accelerate. So I absolutely want to use the patterns. I want to use the levels and outline the fact that we have verifiable formations, we have verifiable pattern considerations, and not to mention all-time retracement measurements that, as we've seen time and time again, like a minimum 382 bounce is at 6.2%. We haven't even hit a 382. We have not even hit a 382 yet. So you have to focus on all of these realities. We have to go deeper into history. That's something I want to look at tomorrow. I want to go back and look at charts from the 70s and 80s. So come on back tomorrow. We'll be here, 11:50 or so, and we're going to do an old time run through to get perspective of where we are and where we potentially go. So until then, folks, get over here to Harmonic Trader. Send me a note, please. Join our Discord. I think that's probably the best place to go. I will tweet that out on my Twitter, and hopefully, Miss Stephanie, we can fix the basic sign up later today. I'll contact you in a bit. But come on back tomorrow, folks, same time, and have a great day. Until then, go get them, and I will talk to you tomorrow.